Thank you, Jane. Thank you. And thank you, Jane, for putting this conference on and these things on and being willing to host what I hope too, and I believe, because I've been talking to people around the building today, going to be a great debate, because we stand at a really important and crucial moment in history. We started this conversation way back, and the last stage was your last conference, Jane. But we do. We stand that is changing almost on a daily basis. And why is that? It's because we're about to remake money. We're about to remake the infrastructure. And you know what? If we designed the banking system or the infrastructure we've had, I said just designed, not even designed today, it wouldn't look like it does. To me, it looks like a piece of software that, one of those pieces of software that got very tangled, getting a bit old, has holes in it, and guess what? It has a back door. This software has a back door. It's called quantitative easing and some other names. So it wouldn't be. What if we had a future where we had public infrastructure managed transparently for the public good? That's not where we are right now. I published what I call my whoosh diagram. It's got two whooshes, one up and one down. A couple of days ago on LinkedIn, if you go and look, you'll find it. And it talks about where we're going. It talks about if we stay on the same path, what will happen is what's happening. And what's happening? What's happening was revealed by the incoming governor of the Bank of England 2 days ago. You can go and look at it on live stream. Sorry, it's not live stream, it was live stream at the time. But you can go and look at it online in the last sort of 30 minutes of the session with the Treasury Select Committee, where he was asked about Libra and digital currencies. And he said, yes, it was a wake-up call. And we've woken up. We're now in a race. And we're going to be doing this. And this is the incoming governor of the Bank of England. We're going to be doing this, and we're going to be doing it as fast as we can, because we're now in a race. And we're now in a race towards global money. And it was little reported at the time. I was just chatting to Fran, I beg your pardon, Fran, from Positive Money, who was going to join us in a moment, along with the panel. Mark Carney, I believe, has set the pattern for this. In Jackson Hole, the last G8 meeting, he gave a sidelines interview that was actually not well reported, where he said, what if the dollar, has run its course as a global reserve currency? What if a digital currency should come along to play that role? What would the advantages and disadvantages be? And it gave a clear window into that thinking. So a question I ask incessantly, some of you will be fed up of hearing me say this, is, we need to know whether we're going to be architects of our future or its victims as we create a new digital financial infrastructure. There's a new group of banks. It's been announced. It's in a press release from the Bank of England. Central banks. There's a diagram I've put out there as well with a Venn diagram showing you how that relates to the G8, because it's not straight mapping, who are coming together on this and making decisions and deciding our future. So the point of this debate, what we want to shake out here is, what do we want? How do we get the institutions that we need for the future? And we've got a great panel. I've got some questions. We've got a great panel. So I'd like to invite the panel to come and join us. With some perspective, shall we say, on the matter.
Oh. Are we sitting in order?
It's different pace.
So I'd like to invite you to go down the line and just introduce yourself briefly, just a little bit about your your background and you know, the organisation you represent, and how it kind of fits into what we're talking about. Then I'm going to bowl some questions first at you, Frank, because you're right at the end.
Sure.
So, but just a bit of an intro. 1 minute, please.
Okay. How long?
1 minute, one minute-ish for the intro.
So I'm Fran Boyd, I'm the director of Positive Money. We're a non-profit kind of think tank campaigning organisation, and our mission is to reform money in banking so that it enables a fair, democratic and sustainable economy. Very briefly, the way I came into it was I was a big environmentalist, campaigner. The kind of crash happened, and I saw not only the climate change agenda getting shelved, but also kind of social concerns, austerity was unveiled, and I thought, wow, we really have a dysfunctional finance sector which seems to be underpinning our economy, and you know, in the UK, an economy that's quite skewed towards kind of a big finance sector and property markets that don't seem to be serving the needs of the public. So I found out Positive Money, ended up joining about 7 years ago, and we've gone on a journey where we've really expanded our work from very much focusing initially on a kind of conversation about how money is created and the issues with the amount of power that banks have, to actually working on a lot of different issues, whether it's green central banking, ownership of the banking system, but the most relevant topic here is around our work on central bank digital currencies or digital cash. And we released a paper in early 2016, which seems like quite a while ago, saying this was a good idea. And obviously 4 years later, we're seeing that acceleration and expansion of the debate. And I'm sure we'll talk more about why that's the case. And you know, for us, it's really about that public good, and that should be at the centre of a new form of digital cash.
Thanks, Fran. By the way, it's Fran Boyd from Positive Money. I say this because you're not up on there, because Victoria wasn't able to be with us.
No worries.
You'd have to squeeze up if she was.
We're not the same person.
So Positive Money is an organisation that it's been campaigning for change with money for longer than probably anyone in this room, certainly than most of the people in crypto. James Sandberg, where do you come from? What do you eat?
So my background is marketing. So first of all, I'm not an expert in central banking, and I'm not an expert in institutions, and I hope that actually adds a different perspective. So my background over the past 17 years is to be actually sort of working with financial services brands. So I've worked broadly across the financial sector, funds, bonds, equities, CFDs. I've done spread betting, sports betting, credit cards, mortgages, loans, alternative finance. So I've worked with a number of different financial services brands, whether it's targeting IFAs or pensions pot managers, or high net worth individuals, or actual end customers. And my company is called Customer Devoted because I help brands become devoted to their customers. So my perspective can be summarized in a few points. First of all, I think that institutions have held an enormous amount of power over the years due to regulation and the cost of regulation, which has now come down. I think digital and customers have converged into this place where actually innovation and insight, customer insight, is really what's going to drive innovation in financial services. And we've seen that, and that is proven in fintech. Will we see this in techfin? I don't know. That's one of the big questions I've got on my mind at the moment, in particular how powerful the platforms have become. You know, in terms of where I think some of the larger kind of institutions need to be focused is, how are they being regulated? So the big question is...
Let's come on to that in a minute or two. We'll get to some of the broad issues as well that you've begun to introduce rightly there, in terms of, you know, the power that goes with data and so on. Alpesh Doshti, Fintricity.
Hello. So I'm Alpesh Doshti. I run a company called Fintricity. As a brand, we've been around for more than 15 years, and I started the company as a fintech back in mid-2000s. So it wasn't called fintech in mid-2000s, but that's where we are. I work across financial services, so I've worked in investment banking and capital markets and asset management, wealth management, and I'm a technologist by background. I love both financial services and technology. and the blanket of change that's going to happen around it is exciting for me. It's taken a lot longer than I thought it would, but I'm seeing the sort of beginnings of that, and obviously some of the things we're going to talk about today are relevant. So thank you very much.
Yeah, thank you. Okay, and we'll be talking about mass adoption and how that's going to happen, and whether we're going to get a choice in some areas as well. So, Caroline, would you do the next?
Certainly. Yes, I'm Caroline Thomas. Basically, I've had 20-odd years of new product development and marketing across the financial world. I think we've all been involved in just about every bank or financial institution going. But for me, it was an interest in bringing and demystifying new technologies into banking, into payment companies, and into stock exchanges as well. And for all of those, I used to work at them and give them lots of advice. And therefore, I started setting up my own company, both as an entrepreneur and as an advisor. Because in the large organizations, you can have all the facts, all the figures, all the business case to make things happen, but you might not have the agility to actually make it happen and show how it can work. So generally, my life has been 5 years in large organizations saying how things could work with new technologies, and the next 4 or 5 years running my own company and selling back into my old clients, if you like. And I think for blockchain, it is, and the topic of today, there is such a game change going on, and the speed of change is something that has changed phenomenally. 20-odd years ago, when I was taking the internet into the Australian Stock Exchange, the threat to stockbrokers would take 2 or 3 years to happen. What we're seeing in banking right now is where a Monzo or somebody else comes out, the change is almost immediate within months.
Yeah. So at the point in history, Fran, first, and everyone else will move along, at the point in history when, one way or another, for the first time in history, we are going to get global money. We're going to get global money that, as one pundit said, does exactly the same as if we were in the same room. I can hand it to you, you can take it from me. We are going to have that, but also right now, as the incoming governor, Andrew Bailey, said this week, it is going to happen. We want the Bank of England to be leading the world, okay? In that frame, is this reverse Bitcoin? Have we woken the banks up with all of the problems that Bitcoin was created to address, handed them the toolkit? Is this a nightmare scenario?
Is this reverse Bitcoin?
Is it reverse Bitcoin? Is it a nightmare scenario? Or is it a good thing? And what would make it one or the other?
I mean, I think obviously disruption and everything else is I think that obviously change is coming, but what happens isn't inevitable. And I think sometimes in our money communities we can get very kind of dystopian and it's all or nothing quite quickly. And I think, what we've learned at Positive Money is that you can play a role in shaping the public debate. And I know from some of the conversations I've had with people at the Bank of International Settlements or elsewhere is that they see that they obviously see lots of central banks looking at CBDCs or a digital version of cash and potentially thinking about a global currency, in part as a response to Libra and Facebook's Libra being quite terrified, rightly so, I think. We don't want to kind of have the founders of the Libra wouldn't just be Facebook, it would be MasterCard and Visa. We know from their kind of activities they don't prioritize the public interest. But actually, they believe that the drive really does have to come from governments. It has to be a kind of democratic push to say, actually, we do need to introduce a CBDC. So it's not without reach of being influenced from the outside. And I don't think that we're going to see a kind of top-down central banks in, kind of putting a Bitcoin global currency that we will have to use on us. We have the power to shape that. And I think for us, it's always looking who has the control, what levers are there of accountability, and whose interests do they serve, and how are they accountable to the public that use that form of money. Because to date, I think even post-crash, we haven't really got to those key discussions, and we've seen governments often not really having the understanding or the confidence to really interrogate, how the monetary system works, how central banks are accountable, and how kind of disruption and innovation can evolve.
So we probably need to do something about that to make sure that there is oversight and transparency, I guess. That's why organisations like Positive Money exist, of course.
Exactly.
But you raise a really interesting point. And this is I wanted to sort of draw this and get your view, because I know you have thoughts on this. Whereas cryptocurrencies is and presumably always will be opt-in, central bank digital currencies are, by their nature, if they become established, if they become the established way of creating money, opt out. In fact, you can't opt out, because that becomes a legal tender. Are there any problems in that, James?
Well, I mean, I think really we're talking about choice here, right? So we're talking about choice.
Yeah.
So if we look at the financial services landscape and how much innovation, disruption, and what I actually call kind of better value propositions that meet customers' needs better, right, have come through. If you think about currency, I mean, essentially, I'm a customer. The only thing I care about is I want it to be safe. I want it to be good. I want it to be, to do the job well, right? I've got some basic premises. I don't really care if this is going through China or Russia or Turkey or Europe or the UK. So if the question is global currency, okay, I'm a consumer. The only thing that drives me is it good quality and is it affordable? Is it the best solution for the job? What job am I trying to get done? Does it meet the job requirements that I'm trying to get done? On that basis, sure, I think there'll try to be a lot of central banks that are trying to do a bit of a land grab, but to your point, actually, I think, it is driven by customers, right? It's all about adoption. So if you take a platform like Amazon, let's take a generic product category like socks, okay? If there's somebody who is selling a premium, well-known brand of sock at a price premium of £5, and then a Chinese supplier comes in and sells it for 50p, what's going to happen? Market share is going to go up with a more affordable solution, and therefore the market dynamics at play here, because we're digitally driven, global and totally connected, it's all about price, value proposition, and appropriateness of solution. You raised
some really interesting points, but in the room, would you put your hand up if you're a British citizen and you decided to adopt the pound sterling? Oh, just a minute. None of us did. So it's not about, it can't be about opt-in, right? If it's a national currency, then we don't get opt-in. And that raises all sorts of issues. You alluded to some of them, but let me ask Alpesh. You're an expert in digital currencies, cryptocurrencies and identity, and you know about some of the issues around these. Given the moves in China, where they've said they will titrate, they will decide on an individual basis on how much they trust you, and therefore how their digital currency, which they're making noises they're going to adopt very soon. What are the issues around that?
Well, I mean, I think we're seeing some of the points around digital currencies, and the key thing for me is, or one of the areas is around payments infrastructure. So right now, we have a global payment system. It's not one system, it's multiple systems. And one of the challenges around multiple payment systems is that they don't integrate, they don't work very well together. Obviously have fiat currencies run by governments, and they're reluctant to let it go. And then if you look at the constituencies of the banks, it's not in the bank's interest to make payments more efficient. It's not in their interest to make it more efficient, because if it's more efficient, they lose a load of money. So they've been resisting, and from my perspective, when Libra came along with a large organization like Facebook, it was a massive threat to them. When a little company is trying to, like Bitcoin, no little company, obviously it's decentralized, nobody owns it, they didn't really pay much attention. When someone like Facebook came along and said, we want to solve our payments problem, because this is what they're trying to do, they want to solve our payments problem, and the banks thought, oh my God, we're going to lose a shed load of money unless we do something. And part of the Libra Foundation was a lot of the big companies who have, the problem they have is moving money around the world. So Facebook, eBay, any international company, if you look at some of the companies on there, they're all about moving money around the world. And it costs them a lot of money to do it.
So
that is the key thing that people don't get. Is
just
the
before
fact
we move on, let me just refocus again
Yep.
back onto where we started. Is the central banks coming together in a group? It's documented. We know it's happening. It's in motion.
Yep.
Is this reverse Bitcoin?
No, I don't think it's reverse Bitcoin. I think it's just a defensive mechanism because it will happen anyway. Bitcoin's getting adopted, Ethereum is getting there, and there's a bunch of other cryptos potentially are going to go.
So you still believe mass adoption can happen?
I think mass adoption of digital currencies will happen because by default, a fiat currency in a country, and digital currency like the UK, will happen, and therefore we'll all adopt digital currencies anyway.
So, in fine, I'm just making an important distinction between digital currencies and cryptocurrencies.
Yes.
So maybe
no, I understand the difference.
Clearer.
Yeah, so
you
the
still
digital
you
representation
still believe
will happen.
mass adoption of cryptocurrencies will happen?
I don't think it will, not yet.
Okay. Caroline, a lot to chew on there, right? So what are the implications of all this?
Well, listening to you all here, there's two examples actually I've experienced that came to mind. Talking about China, I convene with ISO International Standards. I'm a convener on the blockchain standards there. 80 different countries all discussing blockchain cryptocurrencies. The biggest amount of content that's coming in now is from China. So we have, I can't name names, but it's the major banks and the major Chinese blockchains who are demonstrating the use cases of this is not a hypothetical future. Here's the architecture. This is how it looks. We're going for it. So I think that's a real, when we're talking about central banks coming together, it's not just Bitcoin and Facebook and Libra. It's much more a geopolitical piece of...
It's about sovereignty, isn't it?
Yeah.
We're talking about sovereignty here, and actually when you read about China and their kind of focus on Bitcoin, they've decided, and it will happen, right? So the Bank of England, your earlier question, I think was really interesting. It is geopolitics at play in this space, right?
Yeah.
It's all politics.
And then one really, really quick other one I mentioned earlier in the week about in Kenya, we've all heard of M-Pesa. Is it a digital currency? Is it a phone currency? What is it? For the government, it's a huge thing because 49% of Kenyan GDP is going through M-Pesa. So the central bank doesn't feel under control when you've got 91 million people outside the piece.
The thing is that the point that I'll make is, you've got to look at it from a geopolitical perspective, from a global payments perspective, global currency perspective. The reason why China is moving faster on this is because today the world's reserve currency is the dollar, right? And obviously the US want to maintain the control over the world's reserve currency as the dollar, and China want it to be their currency, right? The yuan. And frankly, the way that they'll do it is by making it a digital currency. It'll become the de facto because it'll be easier to move money around the world with. So at the moment, moving a dollar around the world is hard work, and it costs loads of money to do it, and it's really inefficient. If they create a digital currency, which they will, if you could move money by pressing a button, and China is now the second largest economy in the world, frankly, it will become the reserve currency, and that's one of the reasons why China's doing it.
Yeah, and that's exactly why, and thank you so much, I didn't even set this up, brings us to our second big question. The race is on, right? If we're going to have national money, right? We're going to have a central bank digital currency. Who's going to get there first? Are they going to win the race to go global? We are, in some form, going to have a global currency. Okay, that raises questions. Who, if it's not Libra, who is going to be in charge of that? Who is going to provide the transparency? Who is going to control that? How will that be managed? How will that be governed for the good of us all? And do we have the institutions for that? I'm sorry, it's a really hard question, Fran, and you're going to get this again because we rely on you here. Have we got the institutions at a global level, at a national level, to support this change and make it open?
I mean, just very briefly on the kind of global aspect, I mean, I think we do face global challenges. So we've obviously got coronavirus at the moment, we've got climate change on the doorstep. So, you know, if we're going to kind of tackle those, you'd hope that there could be a way that we could get towards a global currency that wasn't just for the, you know, for the 1% or just for the global financial markets. But I think a separate issue is that, you know, that we can have different monies for different things, and the worry is that there's a push towards having a global money that everyone uses for everything, and that's a bad idea. That's concentrating power. That's very authoritarian. You know, what we need to be thinking about is how can the UK have a currency which works for, you know, the majority of people in the UK don't need to move money around the world, but what they do need to do is know that they've got a safe, secure currency that they can get, you know, pay their rent in, get their salary in, and if there's a kind of crisis that they can get access to it. And actually, I think what we find in finance, money, and banking so often is that we kind of think that one thing has to do everything with when it comes to money, and it clearly hasn't worked, because, you know, we've got 2 million people in the UK who are unbanked. We've got the vast majority of new lending by the banks, you know, going kind of into finance and property markets and not really getting into different parts of our country. And, you know, I do think that there's a tendency in the UK, you know, we're in London, we're in one of the biggest financial centres, when we look to the future of money, to get a bit carried away with that global perspective, and we need to be the leader, but actually we need to think domestically is different from international, and there's no reason that innovation in kind of digital currencies can't be looking to do different things for different constituencies. Yeah. And again, it always comes back to who's in control, what interests do they serve, you know, and I think for me that's an important
I might be a little atypical, probably am. But, you know, my day is filled with interactions with people in San Francisco and in Hawaii this week, and so on. So it's kind of becoming intrinsically more global as well. Before we go to you, James, for your sort of perspective on this milieu, you know, how that's looks from your point of view, I just want to say we're down to just over 7 minutes, and I want to leave at least half of that for questions from the floor. So have your questions ready. James.
So, okay, how do I use money today? How can I better use money tomorrow? You know, I think, you know, if we talk about innovation, if you look at some of the ways in which banks have succeeded, it's about personalised recommendations, improvements in savings plans, you know, pensions be bringing together all of these pots. Why? Because it's a problem, it's complicated. I've got all these pensions I want to put. So they're solving problems, right? So actually, in terms of how money is used today, it's fairly rudimentary. I have an amount in my bank and I spend it on a variety of different goods and services. Could technology and the data actually be leveraged by institutions in a way which ultimately helps me spend my money more intelligently, more affordably, more efficiently? And can it derive more insight to give me guidance? So I know HSBC experimented with some behavioural insight stuff a few years ago in their Nudge app, which is all about you're spending too much in comparison to your salary level on your weekly groceries. And so that's the kind of merging, I think, of how actually money could be more intelligent, right? And combining money with technology and data really should facilitate better value propositions, more efficient use of funds. And with regards to the question of globalization of that, yeah, I mean, I think let's look in our own backyard first of all, because there are lots of problems to solve with that. And actually, you alluded to one of those problems earlier on with mortgages. You know, so there are a huge number of challenges to solve. There are a lot of people in financial difficulty. How can we use technology, data, you know, in a more smart way?
Yeah, you're right. Money could be more intelligent. It could have smart contracts. It could have the ability to move around at cost, and that's kind of where we're headed. Thank you for mentioning it, but James there alluded to my open letter to the Chancellor on a matter of 2 million mortgage prisoners in the UK. So if you're online and you want to go and look at that, it's in Crowdfund Insider. So. But I'll come to Alpesh. You know, where are the institutions that are fit for purpose? And if not, what new institutions do we need in this place that we're going of global, actually not necessarily global money, but a digital financial infrastructure for the future?
I think the current infrastructure will be what it's like, but what the function of the current infrastructure will change. You know, obviously the Bank of England issues all our money in the UK. They already do it digitally. I mean, a lot of the back end, a lot of the interbank payments is all done digitally already. You know, so I think the fundamentals of the infrastructure already exist. The technological side of how they exist doesn't.
But don't those institutions as they stand today inevitably reflect that past of a banking system that is full of rents and holes and backdoors and all the rest of it? Is that what we want in the future?
No, but I think so the point is the banks will resist the change, but they will eventually adopt it because the Bank of England say, if you want to do business with us, this is how you're going to have to work. And the banks will then change. They have to, otherwise they won't do business with the Bank of England.
Which is a really great point I want to bring to Caroline now, because I want to keep a few minutes. The Bank of International Settlements report, this is the central bank of central banks, recently actually said, you know, there are three outcomes here. There's central banks without retail banks, there's central banks with retail banks, and to paraphrase, the central banks with a little bit of, you know, remaining. Will the banks have to reinvent themselves, or will they go all together at that level?
I think having worked with a bank who's lasted 300 years of innovating one way or another, whether it's financial products or technology, I think they're capable of innovating. But I also agree with the point that the minute that Facebook and Libra came out, you're not talking about small startups with nice ideas who are breaking into the market. You're talking about monoliths who have not just data provenance, but the amount of customers that they have, the amount of insights that they have, and the ability to get money around the world that quickly. And banks can't do that. So they really have to start rethinking how they can partner. And again, I think with Libra, it was surprising how many card companies were all signing up to that.
That was defensive.
Completely defensive,
But I think the thing about Libra, which is also kind of like a symptom of a wider trend, which is probably going to start to happen, is these tech platforms, they own the customer.
Completely.
They are convenient. They're more convenient than anything else, right? So I'm there, and I think back to 2011 when I worked with ICICI Bank, who were trying to embed a bank into Facebook in an app. They created the first Facebook bank, so you can get your statements. Obviously, that's way out of date. But Libra is kind of moving in that, and we're starting to see Instagram introducing payments types of all of this space. The platform is where the transaction.
So James and panel, sorry about this, but we've hit the 2-minute mark. Right, we've got to have questions from the floor.
Very strict.
I will overrun as much as I'm allowed to, but I don't know whether I'm going to be allowed to or not. So questions from the floor, anyone, quickly. Make it short. Just here. Can we get a microphone quickly? Just here, please. It's coming.
Shout out.
Shout out for now.
I mean, okay, yeah, so if we're talking about, you know, the tech companies being corporate money and government money with the central banks, if it comes down to a competition between the two, I mean, it appears as though, I mean, look, money is technology, right? And it's completely digitized now. We know that it works as technology, so... I mean, who's going to win at the end of the day? Who's better at technology?
Who's got the most data?
Yeah.
That's the answer, probably.
So this is
That would be true in the normal economy, but we have players here who are not in the normal economy, who are above the normal economy as central banks. So in that scenario, who's going to win?
I actually think, I think there's an argument for both. I completely agree with your point, but, okay, so let's go back to the point of I care about using a product or a service because it's more convenient to me, it understands me, it's more personal to me. I'm going to choose that above anything else, right? So Facebook are able, through their algorithms, to understand the next financial product that this customer should be recommended, more than a financial institution will, right? So therefore, the experience will always be superior because of that data.
So I'm sorry to cut you off, but the financial institutions are going to have to and are going to get better at this. Who's going to win? We can take one last question if we're quick. Gentleman at the back there. I may get hung, but because it was 1 second a second ago.
Hi, thank
so
you.
this will probably going to have to be the last one.
Okay, so I'm one of probably a fairly small number of people that have actually had to run my business on crypto payments to the Philippines to run a team. And the thing that became clear to me is you've got two aspects. You've got one which is, the cryptocurrency as an asset class.
Yeah.
And you have the frictionless payments. And even using crypto for payments, I was still having to pay 2%, to get it into the local currency.
Can you focus your question quickly?
Yes. Okay. So I'm interested in the panel's view of the difference between the asset class, cryptocurrencies as an asset class, versus the frictionless payments and how the central banks view that perspective.
So
I
absolutely think, if we say Libra is the one, right? There are 2 billion people on Facebook. If you said to them, you don't, to make a payment, you just go online, you put the person's name in and pay them. That is so much easier than trying to send $10 somebody to your same person, which will take quite a long time and cost a lot of money. That's going to get adoption, right? So when you talk about international payments, absolutely. I think if, when Libra happens, which I think it will absolutely change the way payments works internationally. So there's a separation between domestic currency and international payments. And I think we should distinguish between those two. Facebook will, with Libra, if it's so easy, like going back to how to move money around the world, if it was easy to make a payment from A to B from your cousin in Kenya, and you could just press a button and do it, people are going to do that. So that's why all the banks are scared, that's why the central banks are scared, because of the reach and the community that Facebook has is so huge compared to any single currency like sterling. It's really scary.
Well, it's the equivalent of the telephone, right? So the penetration. There's a great book called The Facebook Effect, which talks about Mark Zuckerberg's original vision, and what he actually wanted Facebook to be was he wanted it to be the same as the telephone. He wanted it to be that much in terms of use. We're not far off it, right? So that's why I say they're going to win. And that's why I say, if you're a partner in Libra, don't leave. Stay. You stand to gain a huge amount because, okay, sure, they're not popular. People don't like the whole platform, and there's a lot of issues and security and stuff. But actually, they've got the data, they've got the audience, they've got the world.
And they
have they got responsibility?
And they haven't. Excuse me.
It's about adoption.
And they haven't got transparent governance. Or at least not yet. We're going to have to be quick because I want to take one more question because I've got leave to take one more question. You were going to say something there.
I think it's responsibility. The missing piece in Facebook is what happens when the payment doesn't go through.
It's about trust.
Yeah.
Who do you trust with your money?
One more question. Do we have one more question from the audience? So I'll use the time to go down the panel. Final point out of this debate. What sticks out to you from this debate? What should we be doing, Fran? Apart from what you are doing, obviously. You're doing a lot of it.
Everyone should go on Positive Money website and sign up to our newsletter so you can follow our campaign.
Good one.
This is about
Positive Money.
This is about public democracy. Libra isn't inevitable, and I think that we need to have a public voice in the future of money debate, nationally, internationally, and also at a local level.
I'll give that a round of applause as well.
It's not fit for purpose, and we lose to risk a lot if we kind of blindly walk into handing more power over to a very concentrated number of tech, banks, payment services companies, and central banks.
Yeah. We need to engage. Absolutely, we need to engage. James, do you agree?
Yeah, I do. I think it's an important conversation to have, and it needs to be managed. And I think, if you take into account all of the different moving parts, we've got geopolitics, we've got disintermediation through blockchain, which is kind of pushing against that. We've got kind of platforms with massive amounts of data. It's very difficult to kind of know exactly where all of this stuff is going to land. I think ultimately traditional institutions have had it too good for too long. They haven't been regulated in the interests of customers, and then we've got GDPR, PSD2, MiFID, and now we've obviously got global banking. All of that is regulating what I would call potentially complacent institutions of old into being customer-centric. So the platforms get it, they've got the data, they get the customer. The big institutions are better move quickly, and much more quickly than they have done, because even fintech are nipping at their heels.
Very good point. So what we've got is we've got the platforms moving the institutions at the moment.
Yeah.
That's new.
Yeah.
Alpesh.
No, that's it for me. It boils down to a number of things. One is trust. Who do you trust with your money? It's really straightforward. Who do you trust with your money? Secondly, it's about adoption. How can you get adoption around payments between parties? What's the most frictionless way of doing that? What's the easiest way of doing that? Given that you have to have trust. You're not going to give money to somebody you don't trust.
Yeah, just start a central bank and you can just dip my feet.
I know, but then the third thing is adoption. If it was easy to make a payment, people are going to do it. And if they feel safe with that mechanism to pay money and receive money and it costs nothing to send the money, that's what they're going to do. Because it's the easy and cheapest way to do it. And the only guy right now doing that, and I'm not for or against Libra, I'm just seeing what's happening in the landscape, is look at Libra and look at the number of people it has. It has 2 billion. And I don't necessarily agree around governance. They do have an open source governance model. So if you're a technologist and you understand open source, you understand how governance works as an open source technology, the Libra Foundation is set up to that kind of model. I'm not saying it's perfect. But it is in the direction of not owned or run by Facebook, because everybody thinks that's what it is, and I don't think it is.
Okay, well, I think there's a whole debate to have about just
Yeah, but maybe
subject.
just a fact on trust is that there was OMFIF did loads of polling, and out of who's most trusted to issue a currency, tech companies come out bottom, and actually governments and state institutions come out top.
So it's a bit of PR we're talking about.
Caroline, we're going to have to wrap up in a moment.
2 lines, I think you mentioned is the race is on. For me, it's you can't have the winner takes it all. The winner of the biggest data or the biggest platform, whether it's China, whether it's Facebook, whoever, you can't just have one winner for a global currency.
So thank you, Jane. Thank you for FinTech Worldwide for making this debate possible. So many new aspects and insights from this panel. Would you thank the panel? Thank you very much.